doing well, doing very well, actually. All things considered. I'm trying not to pay attention to the news,
Yeah, right.
um, but you know, but it's okay. Everything else is okay. Have you been doing okay? Keeping
Good.
busy?
Yeah. Been trying to stay busy. Just same thing, trying to stay away from the news, and just I've actually been getting a lot of questions from a lot of clients. So I figured this would be a great time to kind of get you on this, and myself, and just kind of get everybody in one area where we can kind of just address everyone's questions.
I think it's a good idea.
Yeah,
Absolutely. I'll try my best for sure.
yeah, absolutely. I know.
It's a fluid situation. Things are
Absolutely.
constantly changing every day. It's crazy.
Yeah, it definitely is. These are definitely uncharted territories right now. So, um, just for everyone that's starting to join right now too, at the bottom of your screen, there's a little chat box. If you click on that, you'll be able to enter any of your questions on the side, where it says type message here. So feel free throughout the conversation to just throw in a question there, and Greg and myself will try to answer both of them. Um, so it looks like we got quite a few people on here right now, Greg. Why don't you start off,
Okay.
introduce yourself and who you work for and so forth, and then I'll introduce myself.
Okay, great. So first off, I wanted to thank Peter for putting this all together. I think it's a great opportunity, as he mentioned, to reach out to everyone and just help answer some questions and just kind of get some more clarification on what's been going on. Obviously, it's been a whirlwind over the last couple of weeks. I think this thing has escalated to a point where not a lot of people understood what was going on, and now we're kind of in the thick of it. Um, so, so we'll talk a little bit about that. I also wanted to just thank all the healthcare providers and workers and everyone in the healthcare profession, volunteers, first responders. I mean, I've had a lot of friends and family and clients who have been that I've been reaching out to, and they're doing amazing things in this time of crisis. So, wanted to thank people for that. So my name is Greg Giokis. I am a loan officer for Residential Mortgage Services, or RMS for short. I essentially do mortgages for people looking to buy residential homes, and I've been in the business since 2002, so 18 years. So yeah, that's a little bit about me.
Awesome,
Thank you.
awesome. And so I'm Peter Pisano. I work for Compass, and I'm part of the branch out residential team. I've been doing this for like about 10 years myself, and same thing. We work a little bit in the commercial side of things, but we all primarily do the residential sales, condo conversions, and so forth. So I know a lot of my clients. I've got a few that are in escrow right now. Greg, I guess I'll just kick it off and just ask also for anybody that misses some of the questions. This is going to be recorded as well. So once this is over, I'll download this video and I'll email all of you for anybody that misses some of the questions or wants to go back and hear the answer again. So, but I'll just kick it off, Greg. So from right now, what's the most common question, I guess, that you're getting from buyers and homeowners that are looking to refinance?
That are looking to refinance
Yeah, refinance and just home buyers.
and to purchase.
Yeah.
Yeah. So as of right now, in terms of refinancing, people have been reaching out, see where interest rates are, and what's actually happened is that interest rates for refinances, excuse me, are specifically have actually gone up in the last couple of weeks. And the reason for that is because there's been some instability. I don't know did I just lose you?
I don't know what that was. Everyone's muted,
Okay.
so I think we should be good.
Okay, sorry.
Yeah, go ahead.
There's been some instability in the marketplace, partly because of the coronavirus, mostly because of coronavirus, but there was also an influx of applications that came in, I'd say about 2 weeks ago when rates were at their lowest. And the industry as a whole basically reached their capacity to handle all this business. From what I read, I think the industry as a whole received 1,000 times what they normally would receive in refinance applications in a matter of 4 or 5 days. So essentially, the industry as a whole elevated interest rates beyond what they normally would be, beyond what the baseline would be, to curb some of that volume. So essentially, right now, if you're in the process or looking to refinance, my advice would be to hold off for a bit, because any interest rate that you're going to receive, any quote that you'll receive, if banks are actually taking applications, because I've heard of other banks that are not even taking applications at this point, is going to be higher than what the market would actually suggest. So I would say, you know, if you wait this out for a few weeks or maybe a little bit longer for things to settle down, it might be a better opportunity at that particular time. So that's the interest rate. That's the question that I'm getting mostly on refinances. On purchases, if it's people looking to apply and getting into the business, getting into the market now, I think that the pressing question is, you know, what is the market going to look like? Is this the right time for me to be buying?
Right.
And the answer to that question is, it's hard to answer that question without having a crystal ball, of course. But all things being considered, looking at things in the best case scenario, and I think that's how the government is looking at this in a way, based on the stimulus plan. If you understand the way I read the stimulus plan, the bill that they just passed, is a bet that our economy will bounce back sooner rather than later. Okay, meaning when all of this is behind us, however long it takes, I think things will bounce back in a very dramatic way, because the way I look at it, there's going to be a lot of pent up demand for people to leave their homes, spend money, purchase homes, travel, do whatever, you know, all the things have been taken away from us in such a drastic way. And I think that's what the government is betting on. The economy will, you know, bounce back very quickly. So if that happens, my advice to people that are in the market right now, all things being equal, meaning you feel comfortable about your position, your employment, and you know, you've already made the decision that this is the right time for you to purchase a home. In other words, you've got the funds ready and all of that. I think this is actually not a bad opportunity to be aggressive and make offers, because what I'm finding is that the demand for housing has substantially decreased in a very short period of time. Meaning, you know, there are those who are sitting by the sidelines now because they're worried. And then on top of that, because of the open houses, because there are no open houses any longer, there's not as many people engaged with listings. So if you have something that you're really interested in, you find a home. Granted, you may not get a chance to see the house, but if you really like it, you know the neighborhood, or maybe it's a home that's been on the market for a while and you're familiar with it, this might be the time to be aggressive, because I think a lot of sellers may be a little antsy and accepting offers without you know, without much competition. That's my take on that at this point.
Yeah, I agree. And to kind of go off of that, that's something that I'm hearing a lot of as well from a lot of clients is, you know, is this the right time to buy? Is this the right time to sell? And I think that largely depends on yourself and what your situation is like. I mean, there's definitely people out there that need to sell right now. I have a few clients that need to sell right now, and we are listing the house, and there's obviously protocols that we have to follow, and this is uncharted territory. I've never gone through a situation where, you know, we have to virtually show the house first and kind of play off of offers from there, you know? So a lot of that kind of depends if the house is vacant, is the house occupied? I know a lot of multifamily properties right now that are occupied are extremely difficult to actually go and look at. And I mean, you know, the multifamily game, you have to look at the property up and down, you know, and what we're seeing is there's a lot of offers that are coming in on those that are subject to the buyer actually getting to look at the property. So it depends on the seller situation. It depends on the buyer situation in the long run. If the seller is okay with waiting for an opportunity for the buyer to eventually go and look at it, then you're going to see those type of contingencies. And a lot of these offers now are accompanying, there's a specific COVID or Corona addendum that's, you know, accompanying these offers. And that's just something that, again, it's uncharted territory. And me personally, I don't like it, because to accept an offer subject to them seeing it and tying an offer up like that, who knows when they're going to be able to look at the offer, or not necessarily the offer, I meant the property. So it's definitely different times, you know. And but like you said, there's people out there that need to buy, and there's people out there that need to sell, and regardless, it's there's inventory, and there's people that want to buy it.
Right. I think the existing inventory is the key. I mean, obviously, there's going to be a decline in, I mean, we're heading into a purchase market, right? This is the spring market. So there's obviously going to be a decline in the amount of inventory that's out there at this point. Under normal circumstances, when you have inventory that's limited, then, and you have demand out there for homes, that generally would assume that the prices of these homes will start to increase. But what's interesting now, given the current events, is that the inventory may be limited, but demand has also diminished drastically. So now, using economics 101, technically now it's maybe shifting to a buyer's market. Now the question is going to be, how long will this last for, right? Will it shift to a buyer's market for the long term? My thought is that it won't. I think this is going to be an isolated event for however many months. And this is, again, this goes back to, this is the opportunity for a buyer to come in without much competition, without much frenzy, to make a good decision on a piece of property. Now they may have to take some contingencies, as you mentioned, or take some risks, but even those could be mitigated in some respects. But I think that may be the trade-off in something like this. But I think this is an opportunity. I mean, looking at this is an opportunity. And the same thing goes in the stock market. I mean, obviously right now, the stock market's not doing very well. It's gone down drastically over the last couple of weeks. Some think of, obviously a lot of retirement accounts are not doing very well for people, but this could be an opportunity if, again, you have the ability to do so, to invest back into these companies,
Right.
Because it will bounce back. And we know this for a fact because the government is intervening. And you saw how quickly they passed this bill, because they know that it will bounce back. And they're confident that that the economy will readjust itself. So that's my take on all of this. It's more of a positive glass half full situation. Yeah.
Yeah, I agree. And just for the sellers out there that are asking, how are we selling during these times? And again, it's gonna be what you're comfortable with and what your situation is like. If we have properties that are vacant, those are a lot easier to show because you're not actually occupying the property, and we don't need you're not necessarily putting yourself at risk by exposing yourself to anybody that might have the virus. So yes, it's easy to show a vacant property naturally, and obviously when the property is occupied, what I'm starting to see now is I'm starting to see sellers actually directly shoot a video or go live with a buyer and show them the house with their phone, which is pretty cool. And I've heard of a couple deals getting done like that as of recently. I don't know why my video keeps shutting off here. Sorry, just trying to get back on. But yeah, so it's definitely different times. And just to go over a couple stats with some people, I looked at 6 towns, a couple of the different markets that I work at, Medford, Malden, Everett, Somerville, Arlington, and Cambridge. And over the past week, there was 19 new listings that came on the market. And that's between single families, condos, and multifamily properties. 107 went under agreement within that time frame. So the existing inventory before that was 258, and a little bit under half of that actually went under agreement within a week's time frame. And 24 properties sold within a week, and 22 came off the market, or the deal fell apart and actually came back on the market. So just goes back to what I was saying before. There's people that need to sell, and there's people that still need to continue to buy. Another question that one of my clients had, Greg, that wasn't able to make this meeting was, what's making the interest rates jump all around, specifically the mortgage interest rates? Obviously, or not obvious, but there's a difference between the Fed cutting the rate and the actual mortgage interest rate. What's the difference between that, and why is it, what's making those jump around right now?
I'm glad you asked, actually. So the Fed, they had made the announcement. It was kind of a emergency announcement on Sunday night, last Sunday night, that they were cutting the Fed rate down to 0%, right?
Right.
And it was unprecedented, not unprecedented, but it was shocking to see, because I think their meeting was set to happen, I think, 2 days later. So they bumped it up to that Sunday night, and they made the announcement. I think they did it because they wanted to make sure that on Monday, when the stock market opened, that they would have this news and that the stock market would rally. Well, it didn't happen. I think it had the opposite effect. I think people got scared, investors got scared, and there was a huge sell-off. Now, what's interesting to note is that, stock market and mortgage rates are not necessarily directly correlated. They influence each other, right? In the sense that with interest rates, especially interest rates that are sold to Fannie Mae and Freddie Mac, conventional loans, in other words, right?
Mm-hmm.
These loans are securitized in a secondary market. They're bought and sold like stocks are, right? In a different market.
Right.
Now, granted, those types of markets are what they call fixed securities. So they don't provide a lot of return, but they also don't have a lot of volatility, right? Just like people who invest in treasury bonds and things of that nature. Now, generally, stocks are very volatile, right? But you could also win big on a stock if you invested properly. So generally, when money flows out of the stock market, the idea is that that money goes into fixed securities, treasury bonds, and mortgage-backed securities, because again, those are less volatile and more stable, right?
Right.
However, what happened is that along with the sell-offs that were occurring all of last week, from the news of the Fed, and then of course the coronavirus and all the uncertainty that was coming from that, there was also sell-offs in the treasuries and in mortgage-backed securities, right?
Mm-hmm.
Now, why was that happening? Because behind the scenes, a lot of the investments that were going into the stock market were also invested what they call margin, which is money that these investors borrow to invest into the stock market, okay? So when they borrow this money, they invest their own money, but they also borrow this money. Once that money is lost, there's a call on those margins. That's what it's called, meaning they want the people that lent them the money, the credit line, they want their money back. And the only way for them to raise the capital to do so was to sell their other investments, their mortgage-backed securities, the treasuries, and that's why there was a sell-off in both markets. So that's why you actually saw interest rates increase during that time frame, and people didn't understand what was going on. So that was kind of the basis behind that. And since that time, there's been sell-offs and then there's been buybacks. And then on top of that, the government is a buyer in the mortgage-backed securities because I think they saw that this could potentially happen. So they became a buyer. They pledged a certain amount of funds to buy these mortgage-backed securities to effectively create some stability. So as they're coming in and buying, and then the investors are selling, that's where you're seeing such fluctuations in interest rates, right? Now,
Yeah.
the idea would be that eventually a lot of this stuff will kind of settle itself. And then just like the stock market, the secondary markets like the mortgage-backed securities and the treasuries, because they've been sold off so much, they will become attractive again to investors, and people will start buying back in. And then hopefully rates will start to come down and settle down and create a baseline. But for right now, there's a lot of volatility for sure. So that's kind of the basis. But just to add real quick on that, the Fed fund rate is the rate that banks lend to each other. It's called the overnight rate, because banks lend to each other in order to continue their functions. Because when banks take in depository assets, they reinvest that out into the community, and that's how they make money, right?
Right.
But at any given time, they may not have the funds in the actual in their bank to lend out on a commercial loan or to a mortgage loan or whatever the case may be, and they borrow from each other. So the idea is that the lower that interest rate is, the more liquidity that exists between these banks, the more apt they are to lend to each other. And it basically just keeps the wheels moving forward and in motion, so that we don't have a complete stalemate in or what they call credit illiquidity, which pretty much happened in 2008. So I think that was kind of the basis behind that.
Cool. Interesting. So as if I'm a homeowner right now and I'm considering refinancing the house, should I wait until things start to calm down, or should I go into?
Well, I think right. I think in general, waiting at this particular juncture partly makes sense because there's a lot of banks out there that are actually not taking any more refinance applications. Because of what I talked about, the influx of applications that were received 2 weeks ago. They're still working through all of that. In other words, they don't have the resources to take any more business, right?
Right.
It's unprecedented. It's crazy to say that a company would actually turn away business, right? I would never have thought I would say that, but that's what's happening. So that's number one. Other lenders, such as us, we've actually increased interest rates on refinances to a point where it doesn't make sense to do, partly because we're trying to curb the amount of volume that's coming in. So, so I think basically it doesn't make sense at this particular juncture to try to refinance, or not necessarily. I mean, I'll always review a refinance, but the interest rate would most likely be higher than where the true market rate would be at this particular point.
Makes sense.
So Greg, what happens to the, hi, this is Ron. Hey, so what happens to the folks that have already gotten the refinance, or they've taken a HELOC, in my case, what happens to those kind of folks? Is that a bad option, or you're still?
So Ron, so explain. So you're talking about people that are already in process and locked?
Yeah. So is it bad for them, or they're not affected?
No, they're unaffected. I mean, people that are locked in and currently in process, those interest rates will be honored regardless of, the volatility that's existing. We're talking about new applications moving forward, is where, where a lot of this is coming from.
Okay.
Yeah.
Greg, I heard recently from another agent that they had a deal with a QM loan. I have no familiarity with it. I don't know if you're familiar with the loan type, but what is a QM loan, and why are lenders backing away from those right now?
Is it non-QM possibly, or is it a QM?
I think it's a non-QM. I think it is.
Non-QM.
Yeah.
So non-QM, I don't do a lot of non-QM loans. So basically around the time of the financial crisis in 2008, when they passed the Dodd-Frank bill, they essentially created what they call a qualified mortgage and a non-qualified mortgage. Qualified mortgage, I don't know the nuances, there's many different aspects to it, but essentially a qualified mortgage gives some protections to the lender in the case of default of the buyer, right? In other words, the buyer can't go back and suggest that the lender didn't provide a adequate mortgage based on their credentials, right?
Right.
So they created certain standards for that. And then, so when something is deemed a non-QM loan, it falls out of that jurisdiction, right? So the idea is that non-QM loans are a little bit more risky for the lender, but they'll also go outside of specific guidelines and be a little bit more aggressive on the type of financing that they will do under that type of mortgage. So that's kind of the general basis behind that. So what was your question, that your client was having some difficulty with the non-QM? Is that what they're saying?
Yeah.
They retract an approval?
They actually, yes. So they actually got all the way through, and it wasn't, I'm sorry, it wasn't actually a client of mine. It was in a forum that I was following. But basically,
okay.
they got all the way through commitment, and they committed to the loan. They got it clear to close, and then literally within 2 days of the closing about to happen, the lender backed out.
Right. So they backed out because, again, they don't have the same protection that I told you, right, under that jurisdiction. So I think everyone now is on high alert, specifically for defaults, because even if the client is approved and secure and all of that, people at this particular juncture, they don't know if they're going to retain their jobs, right? Because people are losing their positions day by day based on, what's going on with their company. So when you don't have that type of protection, I think in that particular case, possibly the lender might have been concerned about their profession, or the fact that it was a non-qualified mortgage, and they knew that they were exposed from a default, and they probably just decided to back out of the deal. It's not best business practices, but that would probably be the reason why they did it.
Right. Yeah, that makes sense. What and by the way, for anybody that's just joining in, if you guys have any questions, feel free to unmute yourself, or you can also enter your questions into the chat box below the screen. There's a little chat bubble, and just click on that and you can enter your question there, and Greg or myself will do our best to answer it. what, as far as the closing process goes, Greg, I haven't closed anything yet during this time, but what are you seeing as far as the difference or a change in that process? What is that looking like right now?
It's very interesting, actually. So, I think one thing, before I answer that question, I think one thing that what's really interesting about all of this that's been happening, and our industry in many respects is evolving. I think in some ways in a positive direction, meaning we're introducing some concepts that have been kind of been discussed for a few years but never really implemented, such as e-notarizing. Because for any of you who have purchased property, you may be familiar with the idea of closing. You go to the registry of deeds, or you go to the attorney's office and you sign a bunch of paperwork and you shake everyone's hand and you get your keys and you kind of move forward. So over the years, some attorneys have been kind of promoting the concept of e-notarization. I think in some states they've already implemented this, where people can actually close from their computer. In other words, electronically sign their documents remotely. And it's been, a discussion, a contentious discussion. There's some people that really like the idea, others that think that, there's a lot of potential for fraud and misidentification and things like that. I think now, because of everything that's happened, it's been brought up back to the forefront as a discussion, because we may not even have a choice at this point. They may have to actually do these e-notarizations because these attorneys may not be able to go and physically meet with their clients, right?
Right.
So I think that's what's really interesting. It hasn't been implemented yet. So what I'm seeing now is attorneys are following certain protocols, being very careful. They're electing to do closings only in their office, in a setting that they know that has been cleaned properly, right?
Mm-hmm.
They only allow the actual people that are involved in the transaction, the actual buyers, and not family members or any other individuals, and are not part of the actual documents that need to be signed.
Yeah.
Whereas before you could have sellers and real estate agents involved and all be together and all that. So that's been done for now. It's just the buyers and just the people separately, and just the sellers in separate locations signing their particular documents. So that's one aspect that's changed. There's a lot of recordings now at the registry, which has been implemented for a few years, but I think they're doing it a lot more so now because the registries have closed.
Right.
What else? Oh, the smoke certificates. It's not part of the closing, but I know with smoke certificates, that's something that's essential right before a closing. So the Governor Baker, a few days ago, I think, actually it might have been last week, he just put into a bill to allow the smoke certificates to be done after closing now, 90 days after the state of emergency has been lifted in the state of Massachusetts.
Yes.
So that has helped.
Yes.
So yeah, those are the things that I've seen have changed, dramatically with everything that's been going on so far. Yeah.
The smoke certificate, I think that's one of the first things that I thought of right off the bat was that's going to hold a lot of closings up. But I'm glad they tackled that really quickly as far as getting that squared away. Looks like there's a question from Chris. He says, I'm building a house right now and closing in June, and I'm nervous as to whether my interest rate's going to be higher. Should I be nervous? I understand we are talking about the unknown right now. So what do you think about that, Greg?
It's hard to say where interest rates are moving towards. There are certain loan programs you'd have to check in with your lender where they have what they call, when you're in new construction, generally speaking, I'm assuming now you're in a construction loan, you're building the house yourself. If not, then we'll talk about that at that point. But usually, if you're doing a construction loan, your interest rate, you have a certain rate for the first year until the construction is complete, and then once the construction is complete, you convert into what they call a fixed rate mortgage at that point, and that interest rate is predetermined. So you should be protected if that's the situation you're in now. If not, and you're just waiting for the builder to build the house and you're just going to be buying the property from them, your interest rate, if depending on, you can lock in an interest rate from now for 60 days, and potentially ask for your lender to extend that particular interest rate for another 30 days if that's the amount that you need. That's a conversation you should definitely be having with your loan officer today, and asking them to see what options they have on a long-term rate lock, meaning 60 days or more, and then subsequently a rate extension beyond that. Because yes, we don't really know where interest rates are going to be trending. The idea is that they should stay low for the foreseeable future, but at this particular point, based on the uncertainty in the economy and specifically in the mortgage-backed securities market, the stock market, we don't really know where rates are going to trend at this point.
So if it was the latter of that scenario, Greg, if he was waiting for the house to be built and was planning on closing June 1st, would it be smart to lock in the rate May 1st or within the next couple of weeks?
Yeah, I mean, I think you can lock for 60 days and then just do an extension for another 10 days. So my thought process, if I was a loan officer, would be to just lock in the interest rate as it exists right now for 60 days, which would bring you through the end of May. And then if you needed another 7 to 10 days, you have the opportunity to extend your rate lock at that point. That's how I would handle it.
Okay, makes sense. Looks like the next question is, how's the current situation going to impact the rental housing market? Are landlords going to lose renters, or rental market won't be impacted for new renters? I'll answer this one. I think, let's face it, there's a lot of people that are, losing employment right now. I know there's a big stimulus package that's going into place right now that's supposed to help a lot of people out. I think the government understands that, they need to step in here and help these people out and help people out that need that. And I think what's going to end up happening, I think as far as the rental market goes, everybody needs a place to live. I know that I have tenants right now that we're getting ahead of the curve right now, and we're having the discussions with them and asking, what does April 1st look like for making the rent? We understand that these are going to be tough times for people, and what it comes down to is working with the tenant. If they're employed and they're able to make the payments, great. If they're unemployed and they're not able to make the full payments, it's a situation where you're going to have to work with them. And there's a few different scenarios to go through, but there's a few different plans out there as well. I know that they're still talking about some kind of a deferment plan with mortgages. There's also, the evictions have halted for at least 2 months from what I'm seeing, and also foreclosures from what I'm seeing, at least with Fannie Mae and Freddie, I think. So, I mean, as far as the tenant situation goes, we're in a strong economy. Boston's a strong economy, and I know it's tough to work right now when nothing is open, and a lot of companies are working from remote. But I think at the end of the day, we're in a strong economy. Once this passes, I think we're going to pause for about a month or two. But once this passes, I feel like the rental market is one of the stronger markets that usually prevails in these type of times. I got started in real estate in 2009 when we just started climbing out of the recession, and the rental market was extremely strong. A lot of people weren't able to afford to buy a house at that time, so the alternative was to rent. This economy, like where we are, where there's a shortage of housing, so I really don't see the demand really decreasing a whole lot for the rental market. For a long answer, short. What do you see? You own a multifamily, Greg. What's the dialogue been like with your tenants?
I haven't actually had a chance to have a dialogue with my tenants, but what's interesting is my tenants are actually students. So they're in a different type of situation. A lot of them have subsidies from the college that pays their tuition too, and the parents haven't reached out to me yet. So now that you mentioned that, I think it'd be a good time for me to kind of proactively reach out and make sure that everything is fine. But I'm in agreement with you in that in times of, in these types of times, I think the rental market actually does prevail, as you mentioned. In a worst case scenario, if the housing market maybe retracts a bit, or at the very least, if people are hesitant about buying, well, they're going to go to the next best thing, which is they're going to just continue renting. So, as you mentioned before, is that people still need housing, right? It's not like people are going to be living on the streets. So it's either you're purchasing a home, you're living with parents, or you're renting, right? So, so I think, and like you mentioned, I think we live in a city that has infrastructure. We have businesses, we have universities, we have things happening constantly. We have that basis for employment. It's just that we're going through this unprecedented scenario right now that's not even our doing as a society. It's something, it's an external force. It's a medical issue at this particular point. And what's great about that, not that, none of this is great, but the silver lining of this is that when you have something like this, a medical issue or something that you're fighting, at least you have, a target, and you know what you need to defeat. And the great thing is, once it's done, everything is still there. The infrastructure is still there, the businesses are still there, the universities are still there. There may be a little bit of a ramp up time, but I firmly believe that we have, that base, that strong base to recover from whatever this is and however long it takes, right? That's my take on that. So I still think the housing market will do okay. I still think the rental market will do okay. It's not, I don't think it has the same characteristics as the financial crisis. I think that was something totally different, because that was our doing. That was the financial system that created that. This is something totally different.
Yeah, I agree. I agree with everything you just said. I think there's another question that just came in from Diamela. She said, regarding rentals, we actually closed several September 1st deals in the last couple of weeks. And I think, if I'm correct, I'm not sure if you're still out there, Diamela, but I think you're in the Brighton area still. I'm not sure if it's still out that way, but that's great news to hear. There's definitely, I mean, like I said at the beginning of this, there's people that need to buy, there's people that need to sell, and there's people that still need to rent. I think if you're still in the Brighton market, Diamela, I think, I know that this is the time where September 1st move-ins are huge. It's a huge time to get into the rental market. I know there's a lot of availability at this time. So, okay, so you are in the Brighton area. So that's encouraging, because the school year is not going to stop next year. That's going to continue to go on. People are going to continue to go to school and need housing to live in. So I think it just all comes back to, once this passes, and like you said, Greg, there's an end in sight. We know what we're fighting right now, and there is an end in sight. And once we can get past this, things might not go back to normal right away, but they're on the right path, at least. So that was encouraging to hear, Diamela. And again, like I said, guys, if you guys have any questions, we're getting closer to the time to wrap up here. If you guys do have more questions, just put them in here. And if we do wrap up and you do have more questions, just shoot me an email, and I'm going to put Greg's, like I said, I'm going to email everybody this video after, and I'll put Greg's information on there as well. So if you have mortgage questions, you can shoot him an email and ask him right away as well. What about you, Greg? Do you have any questions for anybody out there in general?
I wanted to, well, I guess my general question would be, I'm very interested to see what everyone's outlook is personally on, the housing market, based on what we talked about. Does everybody have a positive view on, what's going to come out of all of this? Do they think that this is, that this is the right time to be aggressive in buying homes? I'm just curious to see what everyone else's take is on that. You guys can email us individually, but yeah, I believe, just to kind of wrap up on my end too. I want to look at this from a very positive perspective. It's very unprecedented. I think the silver lining in all of this, there are lessons to be learned, as we said, in terms of our medical system, and now that there's been discussions about shortage of medical supplies, I think now there'll be maybe some reform with all of that. I mean, it takes situations like this, unfortunate situations like this, which we should never experience, but at least we can derive lessons from this and maybe become, a stronger country, a stronger economy, better people from these types of situations. We should never have to experience any of this, but if there's a silver lining in all of this, is that we learn from it. And I want everybody to stay safe and stay healthy, and definitely practice social distancing. It's very strange to be doing it. I hope this is not the norm for a very long time, but at the very least, this is what we should be doing for now. And I want everybody to know that it's difficult for all of us. We're definitely in it. I've got 2 little children, and I've been talking to a lot of my friends and clients and colleagues, and it's really difficult. And I have a newfound appreciation for teachers and the education system and how much patience they have with children. It's been difficult on all of us. I mean, I just want everybody to know that we're all going through it in our own way. And there's sacrifices being made for sure, but we'll get through it for sure, 100%.
Absolutely. I agree, man. I agree. I think just to reiterate what you said, there are tough times on everybody right now, and I think we're going to definitely get through this. There is another question that just came in from Sherry. She says there's definitely a demand for housing. There was a huge growth in the luxury market in the past 2 years. I'm curious to see what impact it will have on the luxury sales and rental market. Most of the loans and qualifications for those properties require a high score, liquidity, employment. What do you foresee with the luxury market buyer or renter and international buyers? So I mean, I'll speak to the real estate side of that, but I think going back to 2008, and I know this is a little bit different, but the luxury market was the first market to get hit, and I think that kind of holds true to today as well. I think the luxury market is the first one that really sees the biggest correction in everything. Employment is going to have, it comes down to the demand as well. I mean, it's all going to come down to what people are looking for. As far as liquidity goes and the credit side of things, what do you see on that side of it, Greg? Do you think it's going to be tougher for these developers to lock down these loans?
I think for the short term, there's definitely some concern on liquidity. I think I haven't seen this personally, but my guess would be that a lot of these these big commercial projects may be on hold right now, and these loans are being held up, is my belief. But yeah, I mean, because it's just like anything, it's higher risk, high reward. When you're looking at the luxury market, it's definitely higher risk. I mean, obviously, right off the bat, there's the travel ban that we talked about. This is a global pandemic, so across the board, every country in some aspect is being affected by this. So there's that issue. Also, when you're dealing with an already limited buyer pool, and when you throw something like this into that equation, you're limiting that buyer pool even more so. So with not as much demand or even more limited demand, yes, that's definitely going to affect pricing on these types of in this type of market, the luxury market. And that's one aspect. The other aspect is a lot of these buyers are very savvy investors. They may have a lot of their money tied up in the stock market or any type of investment. That may have been severely impacted, which has now changed their entire outlook on their portfolio and their investment strategy. So there's that aspect of it. So yes, I definitely think that if anything, the luxury market would probably be most impacted, especially short term, from all of this. But again, if this is a short term situation and we can bounce back from this relatively quickly, I also believe that the luxury market should bounce back relatively quickly.
I agree. So I think that's it. If anybody has, like we said, any other questions, feel free to email Greg or myself directly. And thank you guys for all coming. Greg, thanks for joining me on this. I think it's going to help a lot of people out there and that had these general questions and common questions.
My pleasure. Thank you for setting it up.
Welcome. Take care, guys. Be safe.